the seven pillars of wealth building. We just kind of brushed over it. So I think that would be a huge add to the listeners today. If you could expand on that, please.
Yeah, so this is it's I don't pretend to own the concept, but I think what I've done is kind of packaged it up nicely for people to understand. So for anybody who kind of gets down this financial independence rabbit hole, seeking financial freedom, trying to leave their W-2 job, part of the question is, how do I know when I start investing in assets? And we're not talking about underwriting. We're not talking about the spreadsheet part, but how do I know which asset class to go into? You can go into notes and real estate and stocks, bonds, mutual funds, but what makes them different? Why do people make money and lose money? And I think in my thousands of books that I've read, people that I've interviewed, I've distilled it down to 7 principles. And a lot of these I learned from Warren Buffett, Ray Dalio, some of the major investors out there. Is one, you got to invest for capital preservation. I think we are in the market cycle right now. We're recording in January 2023. We're in a market cycle where capital preservation is utmost importance, right? Mm-hmm. Don't lose money. Okay. Warren Buffett's rule number 1. Rule number 2, see rule number 1, right? Quite simply. Yeah. 2, I invest for cash flow. Now, cash flow in some asset classes are really compressed right now, but there will be, multifamily cycles different from self-storage, with cycles different from car washes and the like. Making sure the asset has some sort of cash flow now to demonstrate stability, and also, help cover all the expenses on the asset. Number 3, investing for equity growth. Now, a lot of people, if your real estate assets right now include your primary residence, you're hoping you're in a market where you can get natural equity. But I also look for opportunities that have forced equity, where I can manipulate the income and the expenses on the property to create a larger gap in that net operating income and grow it. Mm-hmm. Why? Because those larger commercial real estate assets, this does not hold true for single family homes. Or even small 1 to 4 units. And I would say even 50 units and below, it's challenging. But when you get 50 units and above, you have your asset is valuated on some sort of multiple or division of that net operating income. Okay, if you're talking commercial real estate, it's net operating income divided by the market cap rate that gives you the value of the asset. Right. If I can grow the net operating income, even if the cap rate gets larger, gets worse, the market gets worse, the cap rate will get larger, I'm still making money. Okay, I'm still increasing the value. Investor tax benefits. That's why I love real estate. You have tax benefits in business, but I love real estate. Direct ownership of real estate, private equity real estate, is because I can take advantage of one of the largest tax shelters out there, which is depreciation, accelerated depreciation. Okay. And right now we still have bonus depreciation, even though it's stepping down. Okay. And that's bonus depreciation is more of an incentive than it is an accounting method, but I get to take advantage of that. Also, I get to take advantage of the 1031 exchange to continue to defer my capital gains tax and my depreciation recapture tax. I get to take advantage of that. So the time value of money in real estate is immense. That's how this asset class, the overarching asset class, makes more millionaires than billionaires, because of they understand these first 4 core principles. They can make money in almost any market cycle. Now, I said there were 7. The other 3 are kind of more rules. One, right now in this market, you have to invest in assets with smart leverage. If there's going to be any leverage at all, it has to be used smartly. Because leverage can help you make money, but it can also help you lose money. It can cut both ways. I am looking for assets with fixed interest rate debt. Now, I know there's a huge argument out there for, ARM loans right now. Yep. It depends on how long you're going to hold your asset. It depends on what the business plan is on the asset. But I liked fixed interest rate at least for, 5, 7, 10 years, at least get it to the length of the business plan and options to extend it past there. But smart debt. Okay. This is not the time to monkey around with debt. And then, making sure you're investing in assets that provide an inflation hedge. Most assets do not. Real estate does. I can buy it in today's dollars, and as the dollar devalues, I'm paying it back with dollars that have less purchasing power. So I'm reaping the benefit of buying an asset today and preserving it in today's dollars and paying it back with future dollars that are less powerful. I don't see that trend going away. And then the last wealth building is making sure you invest with amazing operators. Okay. Now, the operator can be you, which means you need to invest in yourself, your education, and become top notch in your class. Really understand what you're doing. Don't leave it up. Don't get out of the stocks, bonds, and mutual fund market only to kind of like pass off the buck on your real estate investing to somebody else. Right? Do your own due diligence on you, or not due diligence, but your own training on you. If you're going to invest in private equity, okay, in these larger deals like what we do, you got to learn how to underwrite the operator, okay, because not all operators are created equal.
Yeah.
And here's the thing: when people transition out of investing in stocks, bonds, and mutual funds, what are they doing? They're chasing yield. Okay, they've been trained to chase yield. And if you take that same type of mentality into real estate investing, especially in private equity investing, you probably at some point in time are going to get burned.
Okay. Wow, that was amazing. Thank you for sharing that. It was very educational. I wrote them all down.
I usually do that. That was like an hour and a half talk presentation in like 5 minutes. There you go.
All right. Is that presentation available somewhere that people can go watch?
Yeah, you can find it at passiveinvesting.com. Like, or we're getting those all posted there, but also on our YouTube page. And if people just reach out to me at Whitney@passiveinvesting.com, I can send them the link.
Awesome. And that's where people would go, because I was going to ask you, where can folks go to learn more about you and potentially invest in what all these wonderful things you're talking about?
Yeah, so there is a special landing page on the passiveinvesting.com site, and it is called passiveinvestingwithwhitney.com. And you can't get these resources anywhere else but at that landing page. And, there I have a book that walks investors through how to start evaluating private equity real estate and just the 7 steps it takes to get invested in their first deal. And a lot of that is front loaded. You don't have to do the same 7 steps all the time, but especially when you're new to the space, you got to understand your goals, your risk tolerance, how to vet operators, markets, and deals, and then we can kind of turn you loose from there.
Yeah.